We're going to do a brief video on Intel stock, INTC, Intel stock analysis. We've got a daily chart here of Intel for you with a 5-day moving average in green, a 20-day moving average in red, and a 200-day moving average in blue. You can see Intel's been in the bear market since about January of 2022, and it's trying to put in a bottom down here just the other day, October 10th. Tried to put in a bottom down here at $24.59. Intel's up today 10% to $28.91. It's up $2.63 as we speak. 46 million shares today. Average daily volume is 42 million shares, and it's about 11.37 on Friday the 28th. So we take a look at this stock and we can see that it is in a serious bear market. It's below the 20-day, obviously below the 200-day, and it's working its way away from and rising away from the 5-day, which is a good sign. Most of these stocks, let's take a look. This is a weekly chart. Let me switch back to the day chart. Most of these stocks put in a bottom here on October 13th, or quite a few of them, and you can see Intel did the same thing, and that was a weekly chart we're looking at. This is a daily chart. You can see Intel is now above its 5-day moving average, above the 20-day moving average. So these are good signs for Intel, and it's not overbought yet. It's beginning to come a little bit overbought, but it managed to rise above this $27 resistance, and it's beginning to look like it might be working its way out of at least the bottom part of this daily chart bear market. We're going to take again look real quick at the weekly chart, but as you can see, this stock got oversold from here. This 24 was just distance between that and the 200-day moving average is too great. And you can see whenever that's happened in the past, Intel's rallied up here, and taken care of that. And that's probably what's going on here. So I expect the stock to get up to the $32 range at a minimum if this momentum keeps going. And basically, it's got to stay above the 5-day moving average, stay above the 20-day moving average, and this could be a $32 stock by the second week in November. Now, that's all my opinion for entertainment purposes only. Now, if we take a look back real quick at what we started with, this weekly chart, you can see that's a really negative weekly chart. This is a 200-week moving average here. This is a 20-week moving average, and it's a disaster for this stock on a longer-term basis. The stock has to rally up all the way to 32 just to touch the 20-week moving average. To get out of this, it's got to close above it, close above the red line, above the 20-week moving average, and it hasn't done that since all the way back here in March of 2028. If Intel closes above the 20-week moving average, it's going to be a big sign that it's probably beginning to work its way out of its bear market. I'm not predicting that. I'm just saying we got it's not a huge amount of money, $3, $4 to go to do that, and that's not that big of a deal. It looks worse on this chart than it actually is, but at the end of the day, it's got to get above this red weekly 20-week moving average, close above it with a 5-week underneath it, and then eventually the 20-week underneath it completely, so you have the price, 5-week, 20-week, to get this stock pushed up towards the $40 level. So let's take a look real quick at the hourly chart, see what's going on. This is a really good development on the hourly chart. You can see it's been below this 200-hour blue moving average ever since. Let me get back on the right one. I wouldn't think. Bear with me a minute. Wow, that's almost impossible. That's since July, the end of July. It's been below the 40-hour moving chart. It's the first time I've seen it go back that far on an hourly chart here recently. So this stock's been very negative, and now we have a great positive here. It's closed above and rallying pretty strong above the 200-hour bar. This is an intraday chart, but it stretches all the way back, obviously, each day. But these are hourly bars. And so this is a very good technical development for Intel to close above and then rally strong. However, on an hourly chart, this thing's overbought. So I would expect this price to drop down here to 27, 26 on an intraday basis. Maybe not today, but certainly in the next day or two, and get some support in here above this previous hourly low of 26.14. If it can get some support around here of the high 26s, 27, low 27s, $27.27 or 25 cents, somewhere around in there, then you can begin to fill this gap and then move forward on an hourly chart, which it's obviously got to do if it's going to escape and get higher on a daily chart. So that's what we've got so far with Intel. Let's take a look and see what RBM Research says about it. We've got algorithmically generated prices for 1, 5, 20-day trading day holding periods for the 28th of October here today. We cover 190 plus stocks. Let's take a look. Intel's right here. It's got buys across the board, 1, 5, and 20 days, $25 all the way up to $26. The low for Intel today is $27.86, so none of these are live yet. So our buys are below the market for Intel. but they are in the right direction, and looking for a bigger discount before the algorithms say to buy Intel today. But all in all, I think Intel's outlook is pretty positive, at least in the short term. You can get access to all of our information every morning before 7 a.m. at rmanresearch.com. Link in the description below. It's free, no credit card required. You get access to 190 stocks, the major forex pairs, BTC crypto, and the most liquid futures contracts, algo prices for all of that, longs and shorts for everything but the stocks, all before 7 a.m. Monday through Friday, and it's absolutely free. Excuse me. Keep in mind, everything you see and hear on here is for entertainment purposes only. You can't use our entry prices or commentary for anything other than entertainment. You should always do your own analysis, and you definitely trade at your own risk. If you like this video, please click the like button. If you want to subscribe, please do that as well. And keep in mind, we'd love to hear from you in the comments section below.